Hello guys, hope you are okay. Today, as you might know, I have changed a little bit for Saturday because the last weeks I always do it on Sunday. Today I changed it to Saturday. As you know, sometimes I change like this, like that. I'm trying to see what is the best time, what is the best day. Most of my students, most of my YouTubers when they are free to watch live. Okay? Instead, you can see any of my videos. So to begin with, please, if you are new here, please subscribe to my channel. If you have friends, you can just share my videos, whatever video you like, to Facebook or to any other social media, and thank you very much for that. Now, the thing for today is, hello wise men, hello Karim, good evening, glad to see you still healthy. Oh, did you hear something else? Did you hear that I am sick? Okay, God, thanks God that all my students, all of the people I know, they are healthy and they are good. So thanks God. So the subject of today, I have already spoken about it, but today I want just to go into details because a lot of things have happened to the brokers and market makers, and in this industries, this Wall Street business industries, anything can happen. And understand that anything is in the benefit of brokers and market makers. Understand that we are customers. So when you open an account and they tell you there is no commission, you will be happy. This what happened to some apps, mini apps like Robinhood and the other. There are a lot of apps. They give you something which you want to hear. You say, "Oh man, there is no commission. It's a lot of money. If the commission is $4, if I made 100 trades a year, just let's say 100 trades by 4, I am saving $400. What a great deal." Now this is what you think and what all the people think, because most of the majority of traders, they don't even search why. Okay? Why a broker give you this service for free? Why? It means they go there and they open a broker and they spend a lot of money and they pay the exchange to be related, because the broker subscribed to what we call the exchange. In order that you would be buying and selling from the exchange, you must pay. Understand that brokers are paying money, and other brokers that are working as a market maker, they are also working, and they should have some benefit from working in Wall Street. Okay, so it's not something that you think that everything is free. Okay, I will tell you a story. COVID kills a lot of people that are older. No offense means by this comment, and that's why I am glad you're still healthy. You understand. See, about COVID-19, which is the virus, SARS-2 virus. The people who have conditions or what we call pre-existing conditions, some diseases, okay, at any time. It doesn't mean that you are old. You can be 10 years, 20, but you understand that when you are 10 years, 20 years, 30 years, most of the time your immunity system is excellent and you have a lot of, your immunity system is very, very strong. But there are some who have some diseases, they are weak. And this virus is like any other virus, okay? But understand that influenza is killing 250,000 persons every year, and no one mentioned it until COVID-19 comes, and then we begin to speak the numbers. There are other for example, accidents in the world. Which is killing more, accidents or COVID-19? Accidents kill way. It kills millions each year in the world, millions, and hundreds of millions are handicapped, are in the hospital, and they have other diseases. You see that? So it's not SARS, it's not COVID-19 that killed that much, even if it kills 500, 1 million. But there are other sicknesses or diseases that they kill too much, okay? So it's not only the age, it means the age if you are a pre-existing condition. If you are 10 years or 5 years or 20 years, you have some type of immunity system diseases, you will if you catch the disease, you will die maybe, okay? So, but thank you very much, wise man, for wishing me good health. Thank you very much. Now, let's go on and speak about this relation. We try to speak about 4 things. Customers, which all of us are customers. We are traders or investors, but to understand that the good thing about investors is when they buy, let's say this year they have some money and they buy some shares from some stocks. Let's say next year they buy other shares. The other year they buy other shares. This is what I expect from investors to do. It means, because investing is a habit, you should always buy in good and in bad markets, because this is how you make money. Sometimes you buy when the market is good. Sometimes you buy when it is dipping. Okay, in a downtrend you buy. Okay, and then when the market goes up, you will be making a big profit. That's investing. Investing is for the long run. Now, the good thing about investing is they don't incur a lot of fees. First, they don't use margin account because it is stupid. I'm telling you, if you are going to invest, it is stupid to use margin money for your investment, because you incur an interest rate. And some brokers, this interest rate is big. I have seen some brokers asking 10%. Do you understand what does it mean, 10%? Who tells you that the market will give you even 10% every year? Who? Like when you are an investor. Sometimes it gives 5, sometimes it gives 20, sometimes it gives 30, sometimes it gives minus 10 or minus 20 or minus 50, like in 2008. And plus, you will have to pay 10% of the margin. So the margin is not a way to make money in investing. Investing, it should be your own money. That's the thing. So we begin with investing because it is the least. Now, so you are not losing a lot of money when you are an investor. Let's say you have $12,000, for example, $12,000 or $13,000. You go and you buy Apple, 100 shares, for example, is the price. What you have, you buy 100 shares. That's it. Okay. So this will not make you lose any money. Just if you lose $2 or $3 or $5 in the fees without commission. Okay, I'm speaking about without commission because I will explain. Because a lot of people, they think because you have no commission that you are not paying. This is the big problem. Okay, this is the big problem. And understand that a lot of people, because they don't understand, that's why they can lose a lot of money every year. They lose a lot of money, but they don't know they have lost some money because of the fees. They think because it's just because they do bad in trading, and this is not true. Okay, so let's go now to swing trading. Swing trading, it is less than day trading in terms of buying a lot. Okay, now let's say you are a day trader compared to a swing trader. Okay, let's say for in our subscription account, which is trading account, we bought, let's say, 10 stocks in a day. We bought 10 stocks. Now, let's say 5 or 6 of them, we stay a long time. 2 months, 3 months, 6 months, 5 months, and we are making money, and then we sell them. So what does it mean? It means that these 4 or 5 or 6 stocks that you bought, you only bought them one time, and that's it. It means in 2 months, 3 months, 6 months, you are not paying anything. You pay only the fee that I will explain later, which is not commission. Okay? Because a lot of people, this is what makes them don't understand that they are losing money from fees. That's why for us, we are in the middle. We are not like day traders where they lose a lot of money of fees, and we are not like investors who they lose less. Sometimes in few years, if you have only some stocks and you don't buy and you don't sell, so you don't follow the market if it goes up or goes down, just you buy and you leave. So you are not going to lose any fees. Okay? Hello, Mike. Now, let's go now to day trading. Day trading, understand that if you are a normal day trader, you are not a very active day trader. You do, for example, 1 trade or 2 during the day. So let's say it is 1. So each week we have 5 trades, 5, 10. So you have 20 trades a month. Okay? So 20 trades, when you buy, when you sell, there are fees. Now here, I'm giving you a new information. I'm not speaking about Canada, because Canada we have still the commission. Here in the USA, most of the brokers now drop commission. It means they don't charge you for buying or selling. And you say to yourself, well, so we are not losing any money. So it's better than before. Now, if I tell you that it is the opposite, you are maybe paying more than before. Now you ask me, how is that? There is no commission. Okay? The thing is, understand that you can lose money from the bid and the ask, which is called the spread. And the most people who get hit by this, who are they? The guys who trade options. You see, options always, you find it's a big chunk of your money is gone because of this bid and ask. Okay, so if you are buying options a lot, try to see how much is from the bid and the ask, and try to see what is the percentage you lose. Okay, let's say you find the ask is $1.10, but when you want to sell is $1. Now how much money you lose here? You are losing 10% of your money. You have already lost. When you buy, you lost 10% of your money, because when you want to sell, you sell it with $1. Or let's say it is $1. The bid, the ask is $1, and the ask is $1, and the bid is 90 cents. So you lose 10%. This is very clear. Now you think that because you don't sell, you don't lose. No, you lost it. You already lost it. If tomorrow the market goes down, let's say you buy a call, you will lose more. You have lost, today you have lost, just you buy, you lost 10%. Tomorrow, for example, the price is $1.80. So how much you lose? You lost 20% of your money. This is how big is this fee, which is called the spread. But most of the people, they don't see it. That's why I ask always, guys, when you are going to buy high volume stocks. When you see only 1 cent for bigger stocks, for example, if you go to Facebook or Apple, you can see, let's say $120 as the bid. If you want to sell, if you own, you find $100.21 cent. It means only 1 cent, because when the bid and the ask are very tight, 1 cent, it means that the broker will not take too much money from you. So you understand? If I can explain this more, I'm just trying to explain into details for those who generally they don't know that much. Hope the thing works. Okay, I will give you some examples, guys, just to make sure you understand. Okay, so let's take option. Sorry for the handwriting. Okay, option. Now try to check the bid and ask. Okay. Now you find the bid is, just to give you a small, 90 cents. Okay, the bid is 90 cents. This is an option. Let's say it is a call. Okay, a call. Now what is the ask? It is $1. Now here, what is this fee? It's called the spread fee. Now the spread fee no one talks to you about, but it is there. Now the spread fee is that you lost. Okay? You lost 10 cents. Okay? Now, if you buy for this $1, okay? So how much you paid in real? You paid $100. You paid $100. This is what you pay for your call. Now, here, let's say you want right away to sell. How much you sell? You sell at $90. How much is the loss? The loss is $10. Okay? And $10, what is it? It is 10% of your money is gone. If you put 1,000, just an example, you put 1,000, you have already lost $100 from your money. So, guys, understand that this is real. And maybe you have never expected that you have already lost 100%. That's why people who bought options too much, they lose a lot of money, but they don't know. Okay? So if you want to buy options, try to see the bid and the ask. It should be tighter than 10 cents or 10%. You should try to find high volume option calls and strike that it is tight. So this is the thing you can just minimize. But you can't take this fee of the spread fee. You can't take it out. It's always there, and you always lose money from it. Okay? Now, so this is in options. So what's the solution? The solution is you can find, for example, here 99 cents. Between the bid and the ask is 1 cent. 1 cent, it means you are losing only $1. So it's better to lose $1 in this trade than to use $10. So you see the difference? The difference is only because of volume. That's why volume here it is used. Okay? So here, when I speak about always volume, I don't trade volume. I don't trade the volume. But I trade the volume. What does it do? It gives you the how much is the, if it is high, the volume, so the bid and the ask will be tight. Okay? When it is tight, it is better for you, because the market makers take less money. Okay? I'm not speaking about commission. I'm not speaking about commission. Now, let's take now an example of a stock. Let's see. Just give me 1 second. I go to chart and see. Let's say I give you an example. Okay, so let's have this is Facebook last day, which is 93, 92, and here 265, 93. Now this stock is Facebook on Friday. It's Facebook on Friday. So this is the bid. This is the ask. Now what is the spread? So the spread here between this and this is only 1 cent. So the market maker will only make 1 cent from you. 1 cent. So if you buy 100 shares, okay, 100 shares, he will take only $1. So you see how good it is for Facebook. Now why Facebook? You pay only $1 as a fee. But this fee, you don't see it. Okay? You don't see it because the market maker has this price from another guy and he sold it to you at this price. He bought it at $265, 92. And he sold it for you for $265.93. And he make he makes $1 for 100 shares that you bought. It means if you spend $26,000, $592, this is what you spend to buy 100 shares. So 26,592, okay, we say here 93, 26,593, this is here. This is what you spent. So, but the spread is only, the fee of the spread is only $1. If you want now to sell, you lose only $1. So you see how good it is? So pay attention, and always, I'm just giving you just an idea to be safer and to lose less, is always you choose high volume stocks. High volume stocks. Now, always you try to check. High volume stocks, it has no number. 1 million, 5 million, 500,000. You will never know. So you should go to your broker and check the bid and the ask. Okay? Check. You should always check in order to know if this is a high volume stock, yes or no. Okay? So, we have finished with this we have finished with this hidden fee, which is the market maker fee. Now, there is another fee. I don't know. It was recently added. I think a few years, 1 year or 2 or 3. There is another fee of this fee. It is called the sales fee. Okay, this is a new. Understand that all the Wall Street, all the government agencies, all they want to eat something from the stock market. Stock market is full of money. So anyone wants to have a way to eat from that money. It's a big cake. Now, one of these things that I want to mention to you, maybe you know, maybe you don't know, is this fee. I will just, okay. For some people who know, you might know it. So, some people maybe it's called Finra sales fee. Finra sales fee. So, what does it mean? It means, in general, they will show you that if you have one share, and you sell it, whatever shares you have, but it's just an example. Let's say you pay 0.000, let's say 1, like this. $. Each share you sell, you pay 0.0, or you say 0 first. Okay, 0. Point. It means it's not a big number, but it is 0.001, or it could be even 0001 here, or 2, or whatever it is. Now this, the FINRA, which is the company that regulates the stock market, trading, and brokers, and this is doing this. It takes a fee. This fee is new. The sales fee, before, it doesn't exist. I don't know how many years, but I think it's 2 years or 3 years they added this. So you are paying it. We are paying this. You can ask your broker. You can ask about your broker about FINRA sale fee. He can give you the page and he will show you how much you pay. Although you see it's not big, but understand this Finra is making a lot of money when it is billions of shares traded a day. It's billions. Now, if it is billions traded a day, maybe this Finra is getting millions of dollars a day or a month or whatever. So this is a big money. So these guys who are working for Finra and getting this money, the people who are working for Finra or the workers or whatever, or the government, or they will have a lot of money. So you understand? So this, I think, a lot of people, they don't know about it, but I want to bring it, that it is a fee. So when you do a trade, you are paying this Finra when you just sell. Now when you buy, no, there is no fee. No fee when you buy. It's only when you sell. When you sell, you get this fee. You can ask your broker, or you go to a Finra sale fee page, and you get all the information. Because for me, I'm just giving you the idea that it exists, because I know it. But to give you the exact amount for everything, no. So you should go, because this fee changes from option, from stocks, from other things. Okay? So this is the second thing, is the Finra sale fee. We have spoken about the market maker fee. Now the third thing is something related to the broker. Now, the broker before uses commission. Okay? When you want to buy, you pay. When you want to sell, you pay. It's called commission. But in many years ago, there is an app which is very famous, which is called Robinhood app. It emerged, and they have a new way of doing business. Now, what is this way? They say you don't have to pay commission. So a lot of people, especially beginners, because for me, like many years ago when they start, they send me an email, and they ask me if I could join and be from the first. So I say no. No. You tell me there is no commission? No. I don't believe you. Because I know there is something wrong. There is something. Because see, now we have a lot of apps. It's not Robinhood. We have a lot. Okay? And these apps begin to attract a lot of traders because they don't know. They don't see where is the money is taken from their account. They don't know how. Oh, you say I bought it with stock. I bought it with $5. Where is the commission? There is no. I see it. 5. I pay 5. There is no money. It's taken from my money. But understand that most of these brokers right now, most of them, they have no commission. So what they do? They will sell your order to a market maker. Always. It means they do some kind of business of selling orders. This happened also with it happens also with mortgage. Those guys who know about mortgage, it happens. You do a refinance with a company, and then after 1 month they sell, we sold your mortgage to another bank. Do you understand? They get some money from the refinance, from the thing, and they got a fee, and they sell it right away. They don't hold it because they want to make other finance transactions. They don't want to stay with the same thing. And they told you there is no change for you. There is no change. Let's say you are with a bank, and then they sold your mortgage to another bank. But it's the same thing. It's the same amount of money. It's the same interest rate. It's the same thing. So you don't worry about it. They send it to anyone, so you don't care. But the problem is that when a broker sells your order to a market maker, he should get some commission. So you see, the commission before, it was clear. The broker takes money from your account and you will see it. Now it is hidden in the number. So I will explain, guys, just to understand what I'm saying. Now I will just say how things work. Okay. Now this is before we have commissions. Okay. Most of the brokers have commissions before, but now they change. So commission, what does it mean? Let's say the ask is $10. Okay? $10, you multiply by 100 shares, so you are paying what? $1,000. This is what you pay for buying 100 shares at a stock, which is $10. Plus $5 commission, because this is cut from your account. So in general, they take $1,005 from your account, because the 5 is separate. Now what will happen now is that there is no commission. They tell you there is no commission, which is okay, but you will be paying $1,005. It's the same amount you are paying here or here. It's the same. It might be more, and they say no commission. And instead of $10, they add $10 and let's say 3 cents or 2 cents or 5 cents. This is the deal, because when they show you $10 here. Let's say $10 and 3 cents. They show it to you as the ask. So you see $10, let's say 5 here, 5 cents. This is just to give you an example. It means your commission is added to the price, to the price of the ask. But what you see is correct, but they add this, but you don't see it, because this broker has sold this to a market maker. Now you end up paying, for example, $1,500. But in real it was $10 a stock. Now here it changes to $10, 5 cents or 2 cents or 10 cents or whatever. But it's the same stuff. This is what I mean. This is before, and this is now how they do it. But you see $10 and 3 cents or 5 cents. So when you see that, you buy. When you buy, thinking that there is no commission. But there is a commission. But it is hidden inside the price. And this is what we call the brokers, they sell. So in general, just to understand this, the idea is, this is a new idea. You can search online, you can find all the information. So now the brokers, okay, the brokers sell. Okay? the transactions, or what you call the orders, to market maker. Just to be quick, because brokers now they can't add commission, they can't say commission, because most of the brokers are no commission. If you find a broker with commission, and you see that all brokers without commission, what do you do? What you want to do? You go with brokers that have no commission. This is just psychological, okay? So you understand that? So you understand this idea that before, when we have commission, now there is no commission, it's the same thing. You are paying. It means they just trick us. And this, it's well known right now. Okay? And the last thing I want to speak about, most of the people, they know, like margin account, you use interest rate, and this you know. So, I don't want to spend time speaking about interest rate, because you know it. You know that when you use margin account and you hold the position for the night, like us, swing traders, if you hold the position, you use the margin account, and you use the broker's money, so you should pay interest rate according to interest rate that they have. So in general, in order to make it like going very, very simple, so I want just to make summary. So I want just to make a summary for you guys. So I said here, okay, 80 is big. Let's say it's 72. So market fees. Okay, market maker and brokers fees. Now we said what is the first one? It is the spread between bid and ask. I have explained this. It means the market maker will make money from the bid and spread. Now 2, the brokers sell orders to market maker. Okay, here we can say market makers use the spread between bid and ask to make money. Okay? So the first one, market makers use the spread between the bid and ask to make money. Second, the brokers sell orders to market maker to make money. Number 3, Finra sale fee. Okay, Finra, which is the company regulating the stock market, brokers, and the other, they will have a fee. Finra sale fee. It means when you sell, you pay something. You pay a fee. Now, number 4, which is very known, that's why I don't want to talk about it, because it's very known, is brokers' margin accounts. So, brokers' margin account, interest rate. So, this is just in general. It means when you use broker margin accounts with interest rates, you pay money. So this is the 4 major fees that are sometimes hidden or not. Depend on you. Do you know them? Yes or no? If you know them, for you it's not hidden. But for majority of the people or traders, they don't understand that they are paying money, and this is a big problem. So at least guys, at least you will be aware that this kind of thing exists. At least you pay attention. If you are trading a lot, you stop trading a lot. You trade just few, like a swing trading. Swing trading. Let's say you buy a stock. Even if you pay this bid and ask $5 or see, I'm not going to sell for 2 months, 3 months, 6 months. So I'm not going to buy and sell. This, when you enter and exit, you are losing money always. And the 3 things goes in. You buy, for example, when you buy, the market makers makes money from the spread. This is one. Now, second thing, your broker has already sold your order to the market maker. So this money is into the price, so you are paying more. And 3, if you are using a margin account, so you are paying interest rate. So you see that all these will make you lose a lot of money. But understand, guys, you think that this is a little, that this is just a little. Try and just see how much money you can lose. You will never know. It could be hundreds a year. It could be thousands if you have a big account and you trade a lot. It could be thousands. Especially for day traders. They trade a lot. And they think that entering a trade, buying and selling, hopefully you are making money, but this will take from your profit. Okay? If you have made this year, let's say you have made $10,000, you make it, for example, let's say you make $10,000 this year, whatever is your money. But understand that 500 or 700 or 1,000 from your money is always gone through these fees. So you can in the future try to avoid and minimize these fees. When you know, you will be better trader. Okay guys, since we are at 48 minutes, I finished the explanation. Now let's go and see what my students and what my YouTube videos are saying. Trevor Finley said present. Thank you very much, Trevor, for coming. Thank you very much, Mike. Thank you very much, Wiseman. Trevor Finley said, next month will be the beginning of my paper trading career for my start in the day trading venture. Yes! Congratulations, man. Go ahead. Which is very good. Doesn't market makers also usually guarantee shares to buy and sell? No. Market maker doesn't guarantee anything. If a stock today there is no someone who buys, how can he guarantees you this? There are some broker, guys, I will try just very quick to try to answer Finley about some stocks. If we find a day, okay. Now let's say this is Facebook. Let's go to some. Okay. Let's go to some stocks and we see if let's see something. Let's say drugs companies. Let's say we go down and we see. Now, this one here, how many? We have 1 million shares now. Okay, let's see if I find you a stock. Yes, look at this. Look here. 5, 10, 0. Do you see this day, which is the 27th of August, Thursday, 27 August 2020? In this stock, which is called CELG.RT. I don't know what's this company, but in this day, the price, the open, the high, the low, and the last is 44 cents, and the volume is 0. Do you understand what does it mean 0? 0, it means no one has asked to buy, no one has asked to sell. So I don't think that there is what we call guarantee. But if it is something the market maker wants, if he doesn't find, yes, he will sell you from what he owns. But the bid and the ask will be big. He will make a lot of money from you. And whenever there is someone else, he will sell. He will buy from another one who is selling with cheaper, because this is the bid and the ask. Okay, so this is just to show you that this idea of guarantee sometimes it doesn't work. But when you say guarantee, most of the people, when you want to buy, you should go to some stocks that have volume, because the bid and the ask I have just because Finley, if you have been here from the beginning of my session, I have explained that the bid and the ask, if there is low volume, the bid and the ask will be large, so you will be paying more. So the market maker will be happy to sell you something, even from his own shares that he owns, because most of the time they have large amounts of shares for every stock that he is selling and buying, and it's all automatic. So it's not just the market makers, he begin to think he will sell you yes or no. No, it's all automatic, because he put the price, how much, and the software does what it does. So it works by itself. So if he wants to take from you, let's say 5 cents for each share, he will do the criteria 5 cents, and it will take 5 cents from each person from a given stock. So this is automatic. It means he doesn't go and do transaction by transaction. He can't do that because it's big. You see, for example, Facebook. We have, for example, 100 million shares traded a day. So market makers, they can't do it buy and sell. There is a software, but they control this software and they put the information criteria, and the software works by itself. Okay, thank you, Trevor Finley, for your question. Tutorial me, good morning from Djellala, Algeria. Thank you very much, Tutorial me, and nice to meet you again. Tenacity, I like your way of explaining and talking. Thank you very much, Tenacity. I think you are new here. Welcome. This is just live. When I receive some live questions when we are speaking about a subject. Now, if you have other questions, you can send me an email. You find it always in the description, my email and my website. Just send me an email if you have other questions that you have to, or stocks you want to talk about. And Trevor Finley, an Algerian that speaks perfect English. What planets are we on? Why you say that, man? Why you say Algerian, they can't speak English? Why? I studied British English, so I can talk to you English, not American English. But I am living in America, so I talk American English. But it's the same. If you understand me Even if you are from wherever, even if you are Mars, or you are from Jupiter or the moon, if you understand me, that's it. I can say nothing. Trevor Foley said, does Djellala take on personal students? Yes. You can go to my website and you find the direct training. Or you can send me just an email and we can discuss this, no problem. So istockmoney@yahoo.com, this is my email, or you can go to website and check. And then we can talk later when we finish this. Trevor Finney said, does all this apply when trading forex futures? Yes. Whenever you go, you find market makers, but market makers are always there. But I have no idea about other things. I have no idea about selling the orders. I have no idea. What I know is about stocks. But the market makers are always there because they make the market move. Because why they call them market maker? They make the market because the exchange does not do buy and sell. For example, when you say New York Exchange, it is just the place where the transactions are. But you find other people inside. For example, the floor in New York Exchange. There is a floor and the people, they come, the big traders and the brokers, and they buy, using that symbols. I have no idea. I have never been there. But they use the symbols 1, 2, 3, thousands, millions of shares. Buy, sell, buy, sell, buy, sell. So that's it. Since they make money, no one cares. So, Trevor Freely said, nothing free, even the land of the free charges taxes. No. Listen. In USA, not all USA states, they have taxes. I think there are some states where they have no land tax. I think Texas or something. So it depends on each state. It means the state tax is not like the federal state. Federal tax is all. It comprises all our United States of America. Okay, but each state has its own tax. But there are differences. So I didn't study each state tax, but it should be different. Okay. But I think someone told me that in Texas you don't pay tax on the land or something like that. I don't know. Maybe we have other states, but I have no idea. NASA said, hello everyone. I was busy watching MMA and boxing. Yes, I always sometimes watch MMA. Now, boxing, I am not a big fan of boxing. I am not a very fan, but MMA, yes. MMA or K1 or other tournaments, I like them too much. And I follow some guys, and I like some guys. I don't like other guys, But I am always with the winner. The winner is my friend. Okay, so guys, do you have any question about this? Because we are going to end this session. It's 59 minutes. Do you have any other questions? Boxing. I like Muhammad Ali. Muhammad Ali. In the 70s, I think in the 80s, 90s, when he was on the ring, I like to watch his boxing. This is the only one I watch. I don't like to watch other, even Mayweather and this Maniaco, or I don't know what his name. I don't watch those guys. Now I watched only Muhammad Ali because of his style. I like his style. I like how he moves. I like how he moves his legs. And what does he do? And we always think that he is the winner. So we trust him. So we're beginning to watch, and we amuse ourselves how he moves, which is very good. Tutorial Me said, my followers want. Your followers want what? Tutorial Me. Complete the sentence. Now, Tutorial Me, watching your live right now. Oh, okay, that's good. That's good. Thank you very much. Herman, man, thank you very much. But you, Herman, you come late for today. I am sorry for the short notice, because tomorrow I was going to a trip. So that's why Sunday, I always do the live on Sunday. But I do it on Saturday today because I will go to some place. That's why. So it's a secret, okay? Oh, on Web Talk, thank you very much. Thank you very much, Tutorial Me. Hope they like what I say. Now, guys, do you have any question in this subject? If not, do you have any other question? Because I will end this session. If you don't have anything, I will just go and wish you a good weekend. Nice to see you on the Web Talk Live. Thank you very much, Teacher Team 44. Thank you very much. Morad Harkat. Yes, I know you. I know Tutorial Me. Because I know you, that's why. Makthira said, I see your... It happens often. I buy at 3 and the sale at 3:11. Oh, that's big. No, it's too big. From 3 to 3:11, it's a lot of money. It's a lot of money. So, yes, because it moves a lot. Because... You understand that penny stocks moves too fast. And since... oh, yes, on Makthira, yes, they can put you in a price. If you buy, it's over. It means you accept. And when you accept, you say, yes, it was 3.11 and you $3.11. You accept. Why you... And I don't know, Makthira, I have no idea if they have bid and ask. Most of the time they have only the ask, I guess. So you can see, Makthira, you can see if they put you the bid and the ask, or they ask you just the ask. If it is the ask, it's a big problem. I will never buy when they just put me the ask. The ask, it means what the market makers wants from me. I want to see what is the market maker wants to buy from me. If it is 1 cent, it's okay. But if it is more than 1 cent, it's bad. Most of the time I don't buy. If it is 1 or 2 cents, I don't buy. That's why I like high volume stocks. So Makthira, try on Monday, try to check the bid and the ask. See what's going on. Okay? Wiseman said, thank you for giving us your time on Facebook. You would be okay doing video in English, or if COVID is a part, scam, etc. Okay, Honorable Yod, thank you very much. And keep an eye on it. I will keep an eye on it. Good night, and thank you very much. Thank you very much, guys. And have a happy or good weekend, and see you next week.